All right, everyone. So let's talk about a really popular setup that you're hopefully going to be able to take quite often. And through the use of something like a TPO chart, you'll get a more clear idea or clear understanding of what levels you should most specifically be paying attention to versus just looking at something like a candlestick chart where this trade also is available as well. So what we're talking about is an inside day break from balance. So it's essentially two things in one. Okay, and you can have these separately, but this is going to be the strongest case for this opportunity. So where we have an inside day, so we're looking at one day where the following day is completely inside the other day, and we have mostly or almost all value overlap, okay, where we have a value area that is completely inside of the previous value area. And well, it's not necessarily value overlap. It's not like we have value slightly up or slightly low. This is almost entirely inside. And we have a balance structure forming. Okay, so you can have this break from balance and not have necessarily inside days or not necessarily have very tight value like we do in this case. So you can see that in the beginning of a range, you could start it off with value more or less migrating, still stuck again within the confines of a range. So one of the most important things that we obviously have to do first is identify what kind of environment we're in so that we can identify what potential opportunities exist. So, are we in a ranging environment? Are we in a trending environment that's just beginning or potentially ending? We know that up until this point, this was after Bitcoin put in a fairly substantial move to the upside. This was one of the first signs that looked like potential top was in. This is also one of the first areas where we began to have not only major kickback and major liquidation structure, which just shows that the market is sort of imbalanced, but also where we had weekly value migration. So weekly TPO charts moving up and then suddenly value beginning to shift to the downside. So we're looking for this ranging environment to begin at the outset of this. All right. What we're also going to see, though, is within this larger range, we're going to have these micro ranges and these micro balance levels form. So come off of this low impulsively. Market looks like it's trending. But again, in this case, you have two back-to-back days that are quite far away from each other in terms of value. So the market is kind of getting exhaustive and, again, imbalanced at this level that is resistance. So we're looking for this area to act as resistance again. What we're going to be looking for ideally is signs of absorption overall at this high. So we're going to be looking for the signs of absorption at the high. And as this structure progresses, look for a more fine-tuned entry into any type of setup. Now, there's a few different ways you could go about this, because in this case, you're going to see that towards the tail end of this setup, we also get another trading opportunity that we share as well, which is the 80% rule, the Dalton rule, or as I have fine-tuned, the 76% rule. Okay, so market is looking like it is forming a balanced range. And the one thing that we're going to identify is that finally, within this structure right here, we have that inside day setup. So we have one day, and the following day is completely engulfed by the prior day. And not only that, we have our value area sitting within the prior value area. So focusing on the fact that volume and the TPO value area are pretty much one for one. So this is two back-to-back days. They're extremely tight. Value hasn't migrated upward or downward really at all. So this is where we're going to start to look for potential breakout opportunities. So with the day of the 19th, we actually close outside of value. So we close outside of value, which does open up the opportunity for a trade that is in a different trade module or trade video. Okay, and that is the 76% rule or the 80% rule if you go by Jim Dalton's rule. So at the high of the structure, we know we're approaching resistance. So we'll look for signs of absorption. So this is the tail end. This is the 19th and the 20th. So just to reiterate, we're looking at the 19th, okay, as the inside day. So when we look at this structure immediately, what we see is that at the 19th, while price action in terms of a high and then the following high has not really done much, all right, we haven't put in a higher high, we see that CVD is making more of a concerted effort towards the upside. So we know we're at a contextual important level, okay, because we know that prior, that was the first turning point after a major leg up within market structure. We know that it was previously resistance on higher time frame market structure. And now we see that we have potential offside positioning. Okay, so this is not necessarily on its own. Some people will start getting into position prematurely here, but what we're looking for is ultimately the break from balance. Okay, so you could say that potentially the break from balance could have occurred at the high. All right, but what we know within the prior day is that we've already seen a rejection here on this TPO. So if we unfold this, a rejection here where the market was previously accepted in this high volume node. So we have more of an indication that the market is no longer really accepting business to the upside. We know that we have that delta divergence. So since we understand that most of this, in this case, after this day, or what has transpired up to this period, has shown signs of absorption at the high, we should be adding more weight to downside movement. Okay, so not even mentioning the 80% rule setup, what we're looking for with a break from balance is a break and acceptance outside of the value area of this composite that forms. So these back-to-back days are ultimately the area that we're looking for the market to gain acceptance into. Now we could see that towards the low end of the structure, the market has rejected these lows pretty cleanly on the 18th. Okay, comes back into this level, spends a little bit more time in them on the day of the 19th. Okay, but again, rejects from the high sooner. We know that the absorption is clear at the highs. Okay, so what we're looking to see is more than likely we're adding weight to that potential downside move. So potentially gaining acceptance to the downside. So what we're going to do is form a composite. Okay, so our composite, the value area low right here. We're going to be looking for the market's response, ideally through this level. So this is a setup where you are not really getting involved within the value area. You could start to look for acceptance pre-break, but just remember that anytime that you're going to get involved before any type of even small sign, such as a break or any kind of probe, you're taking a little bit more risk. What you still want to see at these lows is the same behavior. Okay, so just to go over this, we're looking at the overall environment. We see that the market is potentially beginning to form a larger range. We've seen major resistance towards the left side of this structure, meaning on the structure that was formed over here. We've seen up until this point there is quite a clear delta divergence. And now, even though we haven't gone over this yet, we have a confluence of multiple setups. So multiple setups meaning we have an inside day, we have inside value, and then we have a Dalton's rule setting up as well, knowing that the market has been a little bit more rejected at the high than at the low at all. Okay, so what we're looking for is potentially that break from balance. And if you understand the Dalton's rule already, you might be able to get in a little bit earlier, but again, we're just treating this like this setup in isolation. So we have the inside day, the 76% rule, and ideally one leading to the next in terms of a breakdown. So a balance range up to this point, a larger balance range over the last 7 days, but in the last 2 days that we're paying attention to, it is the most balanced it has been. Okay, we had an inside day structure over here that occurred with a breakout earlier. All right, so we could actually go over that one, but we're focusing on the end period. All right, this is after the first correction, but again, it's the same exact play. In this case, there was absorption towards the downside, and we ended up breaking back up towards the high. All right, but in this case, we have what? We have a little bit more contextual risk reward because we're approaching a high that served as a previous higher time frame market structure resistance. So what took place down here is within the middle of a range. So this is sort of where your smaller traders get involved. You have much more certainty getting involved at a higher time frame structure, so towards the high, where you see absorption up here, and you know that you're fading larger participants if you're trying to go against them, but you're working with that flow if you're taking that direction, right? If you are fading rather where the absorption is occurring, which is in this case attempting to move upward, but we know that CVD is capturing all of that action. We're showing that someone is capturing all of that action. So we have a few different things that we're paying attention to. The side that's obvious, okay, CVD showing that there's clearly a divergence. All right, now we're going to be looking for the signs that you wouldn't normally see at a low. So if the market is balanced, so if the market had been balanced over this period, what do you normally see at the high? You see that buyers become more unwilling to buy at the high, right? Or buyers become more unwilling to bid. So you see aggression towards the high, but you don't see the bid walking up. And towards the low, what should you see? You should see that sellers become less eager to sell passively down here, right? This should all be absorbed by passive buyers or responsive buyers. So what you don't want to see at the low is that sellers become more interested in passively offering this low. Okay, what you'll normally see within this structure is that sellers within this will begin to sort of taper off their passive activity as we approach the lows. It'll be more of an aggressive participant that is entering into short positions rather than sellers actually offering passively. Okay, so we'll typically run into the passive buyer. All right, so out of that low, after that, we'll normally see that in that case, buyers will, and we'll just scroll back just to give you an idea of what we're looking at. So towards the low, what you don't want to see, let's go into the 15-minute chart, and we'll go into the center of the structure before we get to the point we're focusing on, because now we have, from this, we have our value area low of this composite. So that is right around 9,550. Okay, so going back, what we're looking at is towards that low. Okay, you'll see that towards the low, there's less willingness to offer this. So we get down towards 9,600. You can really see that no one is really interested in offering this down there. Previous lows that we tested, there's not much offering at that low, right? The market comes into this level, you get aggressive selling, but rips right out of it, and we form the imbalances and are able to close above them. So there's less interest in offering this level. So what you're going to look for in any kind of break from balance is that something has changed in that regard. Okay, so less interest in offering even in the middle of this structure, so 9,650. So for this period, when the market actually breaks down, so what we have right here, and just to bring us up to speed, is we have that value area low. So what we're paying attention to is a sign that the value area low is giving, so a break from balance of this structure. So this is the day as it's transpired. The 80% rule, the 76% rule has taken place, but we haven't gone over that yet. And what we're looking at is acceptance and willingness by passive sellers to offer this. So again, going to the notes. So sellers willing to offer at lower levels. Okay, and then buyers who initially might be responsive, not showing initiative to pull it out of this level. Okay, so you'll see that someone steps in down here initially to buy this, but then are they going to show initiative to pull it out of this level? The areas we're going to be defining our position around are the imbalances that occur into the low. Okay, so we're looking for imbalances into the low, and that buyers and sellers are both taking place in two-way activity, meaning that it is being offered. And towards the break of this low initially, this is the drop. You see that price falls below fair value. So fair value, in this case, the moving average, the volume weighted average price. So this is where buyers and sellers put on risk over this day. And if anything, if we're below it, it means that longs are more in trouble than shorts. If you just imagine there's a 1-for-1 in terms of participation at this level, if we're going to treat it as if it's neutral, which it wouldn't be, we can imagine that in any case, if you're below it, that shorts are in better position, that they are in control. So we have the breakdown of the level, and one of the first signs that we see is that yes, we do see buyers bid this up, but immediately at the low, what you should be paying attention to is that sellers are willing to offer this much lower. So we're looking at a 15-minute chart right now, and what you can see is in the responsive candle outside of this low, all of the willingness to offer this as a sell. So offer this, when I say offer, what I mean is to push the offer or the ask down, looking to sell any type of, in the face of any type of aggressive activity. So this is an imbalance that you're going to be paying attention to, because this normally should not happen at the low. You normally don't want to see that sellers are willing to passively sell at the low. If this is a balanced area, that activity should reduce towards the low. You should see that buyers become more willing to passively absorb this. If anything, we'll see that any kind of initiative response pulls it outside of this level instead of immediately walking into a wall right above an imbalance, right below an imbalance. So paying attention to where our imbalances are within this drop, again, keeping in mind where these key levels are. So now we have the sign that acceptance is clearly taking place at these lows. And this is a choice where you could either get involved aggressively. So you see this, and because of this, you're seeing that sellers are willing to sell down here, and prices are unable to close above that. So you can enter in early. And remember, what we're going to be doing is targeting the next sticky area. So first level would be the low of this structure, but ideally the next level is below this gap. So first things first, the acceptance below the low, you would target the single print, and below that you're looking for this structure to break down and target the naked point of control, which is next, because ideally if you gain acceptance into single prints, you're more than likely going to auction further. But we can't tell if we gained acceptance into this yet until this trade continues to transpire. So first target is, after the break of this value area low, one of your targets on any time frame, which would be the single print tail that we see. And you wouldn't necessarily need to call it a single print as if it was in the middle of a structure, but we're looking at the excess at the low. So this was the last area where a responsive buyer was. So you want to see, and you have to anticipate that that buyer still might be there. All right, so what we see at the low is that sellers are willing to offer this. At the point that price closes below, the instant that price loses control, or sellers are in control and buyers lose control, unable to bring it above this imbalance. This is the imbalance we're focusing on. We have an imbalance and anomaly within this structure. This is the area where I would be defining my risk. Okay, the last point above this imbalance, because at any point, as long as we are below this structure, this is the last place where two-way activity really was duked out. So this kind of imbalance is an area that should act as resistance if we attempt to retest this. So if I was going to be selling this as a breakdown in anticipation, my stop would be above this level, and in this case it would ideally at least be above the imbalance that we see within the structure into the low. And what we can do is we can actually go down to the low time frame, and we're going to box this out. Rather, what we'll do now, we know where the value area low is. We know that it is down right here. So at that low, we see a ton of aggressive selling to the low. Again, 11 million contracts in this case offered. So there is a ton of passive selling that took place down here, which you're normally not going to want to see at a level that should be a balanced range that is taking two-way process from the highs to the low. So here's the level that we want to pay attention to. From this imbalance to our single prints, which is an anomaly, and in this case, the imbalance that led to this breakdown. So we can either get aggressively involved with a stop above here, or we could wait for the retest. And waiting for the retest means that you're going to need to see signs of weakness at this level. So let's highlight this level first with a box just to make sure that we know what took place on the 5-minute chart, on our lower time frame charts. So going back to that level. So here's our lower time frame chart. Let's zoom in. You can see that as price made a move out of these lows, we have a ton of imbalances within the structure. Towards the high though, aggressive buying, unable to close at the high, and you still have this imbalance that occurs at the top side of the structure. So sellers aggressively hitting the bid here. Sellers still willing to offer the high of this price. This is the area that we would be looking for price to gain acceptance through if this was going to reverse. So we're looking for ideally signs of weakness right within the structure. Okay, one of the first signs of weakness that you could also be paying attention to is how for similar amounts of volume that increased delta moves price more in one direction. Okay, so what we can see out of the structure is the type of response you would expect after a very, very violent move. So you're going to have some sellers trapped at the low, but then what you're going to want to see is that for any kind of increase in delta outside of this low that we're able to close above any imbalance previously. All right, so you get an aggressive move out of this low, but again, price not able to close towards a high, and we see that for these imbalances that we're not getting any kind of upside movement. So focus on the volume in this case. So we're looking at 35 million, 33 million, all right, range of 52, 54. The next candle that comes in, okay, we have a range of, in this case, we have a volume of 23 million, all right? We have a range of 20, and the next candle that's an equal volume, and we're again paying attention to where we define a risk above this level, the next candle that is of equal volume and a much less delta, a much lower value in delta, is able to actually move us further down. So we're seeing an unwillingness at this point for buyers to step in. All right, we're seeing an unwillingness for both passive buyers and aggressive buyers to step in towards the tail end of the structure. So what you normally will see is into the low, you'll get the aggressive buying out of the low, but then towards the high, as price begins to consolidate, those buyers will step off. All right. So buyers will step off towards the right-hand side of the structure. So towards the high, you'll see less of aggressiveness towards the high. And what we actually have is that for the selling that comes into the market, it's able to move the market more than the buying did initially. So what that says is that there's less thickness and support down here. Again, break down through the low, and you get more of that offering behavior at this low. So it's a bad sign when sellers are willing to offer the low, right? When the book is, remember, this is the order book that is coming down and offering price at these lows. All right. So this is the type of structure that we look for. If we're looking for the breakdown immediately in progress, you're going to be looking for these imbalances to get positioned behind them, right? So we see that on a 15-minute chart, it's a little bit more it's aggregated in a way that we're able to more cleanly define where this imbalance occurs. So if we're looking at this chart and we see, for example, that this is where we had a ton of offering activity and a ton of buying activity, a ton of selling activity, this imbalance in general, this is the area to define our risk above. All right. Now moving forward, you're going to see that this area, they attempt to retest it. All right. And this is where you're going to be looking for signs of absorption in those attempts. So if buyers are able to move price up with conviction, or are we seeing imbalances at the high, unable to close at the high? All right. So if we look at two back-to-back structures in this revisit, such as this, right? Price moves up, offered at the high, aggressive selling, aggressive buying at the high, unable to close, right? Closing below the point of control. Now remember, your point of control should be on your chart, closing below the point of control. The next candle that comes in, sellers completely just show control, right? They're able to close towards the low end of volume. They're able to push this candle down, okay? For the progress and effort that is taken to move price up, we are unable to close towards a high, but for any selling that comes into the market, we're able to push price down. And we're looking at two candles that are back to back, and even the selling candle, we have less volume. All right, we have aggressive selling, but sellers are clearly in control. They're able to sort of muscle their way around the market. Again, in the next retest, we're looking at buyers that are constantly just getting trapped below as price is auctioning back down. So we're seeing imbalances towards a high. So sellers are taking all of this activity, and yet buyers are unable to close towards this high. All right. So what you need to see in any kind of retest is the sign of absorption, right? Is the sign, one, that at the breakdown, we'll go back to something like the 5-minute chart along this level as well. So if we scroll along this and look at how we're observing this, you'd be observing this in real time. You know, as you're approaching this level where your risk would be defined, okay, this is an area where you could get passively involved, right? As you're approaching this level, which is above, consider that the risk is defined above this level, which I guess you could leave it as that box, but we're trying to just distinguish that the risk is defined above the imbalances. As we get to this level, are we seeing that buyers are able to close at this level, or are we constantly seeing that aggressiveness and imbalance is getting pushed back? Okay, so looking at that on the lowest time frame chart that I will look at, so 5-minute chart usually is the lowest time frame. Sellers able to exert themselves on buyers though. So for the sellers that come in, they're able to push price down. You see they get these closes towards the low. Okay, volume towards the low, point of control at the low, point of control at the low. Okay, and then price auctions back up, and we see the same behavior at the high. Okay, buyers are getting aggressive, unable to close this structure towards the high. All right, in this case, one of the worst case scenarios is having the point of control with where most of the imbalance is and candle closing well below that. So sellers are clearly in control in this level. So if you're wondering, you know, how would I go about entering into the structure? Well, your options are getting involved at the first sign of an imbalance. So you see the aggressive selling into the low. So when we see that there's this aggressive move into the low, the first attempt to reclaim the level where price gets offered, if I'm getting aggressive, would define my position right above this imbalance. All right. And I'm not just taking into consideration the imbalance here, but through the low. So where is the imbalance through the low that stands out? Well, one of the most obvious signs is right around this zero print where price was unable to make it back up through. So we see that in this correction, even for all of this activity that was stopped out, price is getting offered immediately, unable to close this gap. And if I'm going to enter into a position, I'm going to look to take advantage of this imbalance. So the fact that sellers are offering this, and remember how the candle transpires. So candle came down, closed here, opened here, and now has closed here. Even though we moved higher and lower, closed below where all of this volume came in. All right, and you still see that price has been offered lower. So there's a ton of offering activity at lows where technically passive sellers should not necessarily be as interested to get involved. So this is an opportunity to get aggressive and get behind a trade in anticipation of a breakdown. All right, so what we first did was identify what type of structure we're in. Okay, so we observed the larger environment. We have two trades you could have taken within the structure that were pretty identical. Here's an inside day, inside value, and we had the one that we ended up taking over here. Okay, the one that ended up being more attractive, you could have very well taken this trade because obviously you would not have known about this trade yet, didn't take place. But just understand that if you were taking this trade, okay, you were still taking any kind of counter trend movement at that point because your resistance would still be above you. So your take profit wouldn't be under the assumption at least that it was going much further, but you know, this break of balance All right, if we're looking at inside day break, for me would probably be just at least the high of this structure, right? But when we see that the larger picture is dictating that this structure is, in this case, moving back up into higher time frame resistance, one of the better trades to wait for is for some larger trade, or rather larger, higher time frame market structure, risk reward. So in this case, playing it against one of the major inflection points that already occurred. And we see that as the market started balancing out up here, that opportunity came. All right, that opportunity came with clear signs of absorption at the high. So we had that CVD divergence at the high. We had inside day structure set up right within here. And even if you're just looking at a TPO chart, as price made its way down to this level, you could see that there was a ton of volume taking place at this level. All right, so at this level, at that value area, okay, so we'll get rid of these lines now because these are from our imbalances. So at this value area, we could see that there's a ton of volume that's coming down to this area. So we're seeing two-way trade facilitated. And then when we get down to the lower time frames, we can see that we're being offered immediately rather than passive buyers grabbing up this liquidity and sellers stepping out of the way, right? Why would you want to sell this if you thought that it was coming back up? Okay, instead we're seeing increased selling activity down here. Not only aggressive selling activity, but passive selling activity as well. Once we identify the imbalance, so the imbalances within our structure, we get a more clear idea of where we could define our risk, because at this point, this is a trigger. If I'm going to be treating this trade as maybe a mean reversion trade, this would be my trigger right here. Because at this point, anyone who passively sold this is going to be off sides. Okay, it puts all of these passive buyers in better positioning. Okay, it puts all of the aggressive buyers here in better positioning. So if price breaks back above this level, it's more likely that this level is going to act as support. And that's because if you and I get short and price breaks back above a level where we offered price, when it returns to this level, you and I might be reevaluating our positioning and willing to get out of this position. Okay, so once you spot the imbalance, you spot essentially one of your triggers. All right, guys, so that is the inside day break setup. Okay, there's a few things that we talked about in this that we're going to be covering in separate modules, but what we're doing is identifying what available setups we have, trying to take the best risk reward setup. Okay, so if you took this trade down here, you were more towards the middle of this range, but you could have said, reasonably that was the pullback after this trending period. All right, but still, as you get closer to this previous high, you're in a more apt area to define risk because this is the higher time frame high. You know that at this point you're fading larger flows if you're taking a trade at this high anticipation of moving upward. You have larger selling pressure up here because it's a larger area within market structure. You have those other participants in that are maybe not necessarily involved at the midpoint of ranges or within micro ranges because they're not typically scalping and taking place within those small structures. So we look for passive selling, so willingness to offer this at lows, and we look for a lack of initiative buying response. So towards the tail of this structure, what did we see? We saw that this was being absorbed, so buyers were getting absorbed. There was no ability on part of the buyers to be able to get aggressive towards the high and move price out of here. So the only time that we saw slightly any sign of that was towards here when we closed at the high, but still price came up, and immediately when sellers came into the market, we did not see that they were able to hold this high. All right, so that's that, guys. Till next time.